Well, hello there, YouTube. Hello there, X. Hope everyone's having a good evening. It's about 9:30 here in Hill Country. It's chilly back here. I realize I always wear this shirt. I bet I wear this, or I've been wearing the same shirt for like a week. But I don't have many long sleeve, warm, comfy shirts. And and back here in this part of the house, it's super drafty back here. I just sit back here and freeze my butt off. All right. In Texas, they don't really have good heaters. They just kind of give houses just kind of so. The heater doesn't, it just kind of barely keeps the house, um, barely keeps the house warm. Texas is known, we spend our money on air conditioners down here. Okie dokie. I was just looking at some stuff, but we can talk about that stuff later. Let's see what Bitcoin's doing. Bitcoin does trade 24/7, which is cool because we can look at it all weekend long. I like that it rallied. It bounced hard off 81. It darn sure took out the previous low though by just a little bit, and then rebounded really hard on the 30-minute chart. Bounced off of 81.2 really hard, and now we're back up here at 84.1 basically. Back here to a little kind of point of control, right back to kind of a little trading range. We have a lower trading range, so we're in the higher one for now. Of course, the bulls would like to run us back. I mean, I'd really like to see us back in this trade range. I was fine with trading around 89. We don't want to lose 90. We want to build a base here and try to take on 95 next. We're going the wrong direction. I'm not happy about it. All right. Well, let's talk daily factor. And I think I forgot to download the sheet. I think, as usual, probably download. All right, it's called Friday Night Fever, Freaky Friday, F List Friday. Welcome to the F List. I just haven't been very creative lately, so we're gonna do F for Friday. Anyway, I think that's fun. We'll do some days of the week numbers, but then we'll get back to actual themes. I just like to do the same theme all the time. I mean, you know me. If it was me, I would look at the same freaking 20 ETFs the entire time because all I'm into is the diversified hedge fund style, ones. But whatever. All right, we need to look at all these so we discover the new ones. So let's see what we have. Let's meet our contestants. Now we always start with the high yield, which can be dangerous, and that's why I was looking at that. That's why I had that chart up. We'll get into the middle of that chart here in a second. I'm glad you're up late, DGen, and I'm glad you're here with us. We'll try to get this over with pretty fast. This should be a quick one tonight. All right. Meet our contestants. Feet. Feet is yielding 81%. Now, everyone thinks I'm a Yield Max fanboy, but I'm actually not. And Feet and 5E are their two absolute worst funds. I cannot stand those funds. Anyway, but I bought them a long time ago. But they actually do what the prospectus says. I just think the plan is not a good plan. Anyway, price 90 days ago was 31. The price now is 22. And this, I mean, 5E has the same 5 stocks as Feet, but they also have they actually have the stocks instead of just the covered call strategy. So, and this one's actually done, and it actually does less on yield, does better if the market's going up because they have the stock, so it's uncapped upside, but they have the stock, so it's uncapped upside, so they do, or downside, so they do worse if the market's going down. Well, guess what? They've done worse since the market's going down. In fact, that's what I was comparing. Yeah, people think, I mean, people, let's see here real quick. Okay, yeah, people think Alti sucks or whatever. Alti has nothing on 5E. I mean, man, 5E goes down faster than Alti and up slower. It's a double loser. I mean, anyway, um, I'm just not a big 5E. This is since it's been incepted. This fund has only been above water for a brief second if you had bought it the day it opened and reinvested the dividends, you know. Whereas if you'd done the same thing in ULTY, it'd been above water about half the time, but not lately. All right, so here we go. So let's go back to the list. But yeah, I'm not a big fan of feet or 5E. Anyway, then we have Fibby. Now, Fibby is a good one. Now, Fibby is from YieldMax, and it's one of their ones that, I mean, single stock ones. It just does whatever the single stock does. Facebook's had a good run of it, so is this lately. Lately, anyway, because the price has gone from 13.36 to 13.16, which is amazing, because it means the 47% yield was true income. Because the NAV essentially didn't go anywhere, dropped 1.5%. So in this case, that the income was good. All right, next we have FEPI. Now this thing earned about 26% yield. NAV went from 48 to 43, so you lost about 10% in NAV, paid about 26% in yield. That's not ideal. That is not ideal. I wish FEPI would have done a little bit better in NAV than they have lately this past quarter. In any event, fiat, of course, is killing it on NAV because fiat is inverse fiat or inverse Coinbase, right? Yeah, fiat is inverse Coinbase. So this thing has gone, but the price has been great because it's inverse of Coinbase. So the price has gone from, call it $25 to a little bit more than $29. A big, big 3.25 point ramp or 3.5 point ramp. Quarterly NAV return positive 18%. I mean, it's an inverse, so it's not going to qualify to win the frickin' contest. Only bullish ones can win the contest. We don't ever want to root against the market. Although these inverse ones can be tools that can bail us out. It's good to know they're working, I guess. All right, FSCO down 4.8 on NAV because the NAV went from 638 to 607, so that equals about 4 or 5%. Sure enough, it lost that much. It's a closed-end fund based on, I think, distressed credit. Then we have FACS. FACS is also, I believe, a closed-end fund. FACS is the Aberdeen Asia Pacific Income Fund. Well, that has good flat NAV. We looked at that one the other day. And then FSCO is the FS Credit. We looked at this one before, too. I just don't remember. But absolutely, those look all right. Let's get back to our Friday night fever. Then we have FTHI. Now, this is a really old, just a real basic, plain Jane, monthly covered call, out of the money covered call fund, super steady, pays a super low yield, but catches a decent amount of upside. So let's just look at this thing. FTHI, the yield, the NAV's gone from 23.82 to 23.75, so that's flat. So that the yield that it paid was actually, captured without sacrificing any type of NAV, but it's only 8 point. That's not that impressive of a performance, in my opinion. Let's look at FTHI. Let's look at it against something like Alti. Alti's a good thing to compare stuff to because everyone knows, because we talk about Alti all the time. A lot of people follow Alti. So this is interesting. FTHI, if you go both of them since, I guess, well, FTHI is an old fund. Let's go back since inception okay. Yeah, that's a good look for FTHI in a bad look for Alti. Very good look. You go back to February Of course, Alti they had a strategy change. They got off to a rough start, but anyway. But if you go back and look at it from there, dividends not reinvested, you'd reinvested in or you invested in Alti, you'd be flat right now, down 1%. But had you invested in FTHI at the same time, you'd be positive 25%. Yeah, you only had a tiny yield, 8% instead of 80%, but it was all money you could spend, whereas Alti so far hasn't been. Now, dividends reinvested, Alti's done better, but whatever. I don't like to look at that. All right, so let's go back to our sheet and see what else we have. But that's a good look for FTHI. Then we have FEIX, FEIX. Now, let's just run FEIX against Alti, I guess. It's a good look for FEIX from Global X. Let's run let's just go back here. Let's run FEIX against FTHI. They're both pretty steady. Okay. That's a good look for FTHI. Not a bad look for FEIX. FEIX looks really steady. You know, it is fixed income. Fixed income is going to be more mellow. All right, and FTHI is just your standard covered call fund. I wonder if FTHI could touch something like SPY. Surely not. No way. No freaking way. No way in the world. That right there beats SPY. Wow. Now, to be fair, it was down a heck of a lot more than SPY right here, so that may be more risky, whatever. Anyway, that's a really good job. That's a really good look. I didn't realize FTHI is a pretty good looking little fund there. Does it beat Big Y? About ties it. Anyway, good looking fund. All right, so back to the. All right, so now we've met all our contestants. So as far as NAV goes, we've got two of them that have done anything, and one of them's Fiat. Fiat's probably going to win. I'm going to override it for the editor's choice if it does win. But I mean, you know, it's been making the money lately. Now let's organize this by stable decks. Which one's the most stable? FEIX. Okay, and we could see that looking at that graph, it looked like a bond. You know, just or like a box spread or something. You know, very very stable, fixed income. Bonds don't move around quite as much as stocks do. I wonder, thank you guys for being here. Now, I was wondering how many people are here. Why can't I see? Oh, there's six of you guys here. It's a Friday night and stuff. We got Bikerman in the house. It's fine that we don't have that many people here. It is a Friday night. I hope everyone's out having fun. And maybe the people that want to watch this will watch this tomorrow. Now, I'm going to pre-record the top 20 show, and that'll be out tomorrow. You know, that's a different show. Anyway, let's finish Friday Night Fever. So most stable is FEIX. Okay, that makes sense. Least stable is Fiat. And that makes sense because it's inverse. You know, it's. I mean, I could see that. You know, right here, this word says volatility. I gave every one of these a VIX type figure. If Fiat had a VIX, it would be trading about 39. Whereas if FEIX had a VIX, it would trade about 4 lately. Whereas, you know, FEPI trades at about 16. The market trades at a VIX of 15. You know, FEPI is similar risk to the market. That's why everyone likes it, because it's a pretty steady fund that pays a pretty high yield, but not just such a high yield you have no chance of ever getting any NAV return, right? So anyway, FEPI's in there. All right. So let's look at the Moxie ranking. See Max's Moxie ranking. FAX is number 1 on Max's Moxie ranking. And if you look at FAX, it has a 1-year total return of 14%, which is actually the highest 1-year total return of anything on the list tonight. FEPI is the second highest 1-year total return. FEPI has the third highest Moxie ranking. Second highest, yeah, FTHI does have some Moxie. I didn't realize, I really never realized that First Trust, it's an old company. I think it's been around since 2014, 20 or 2012. I mean, it's been around a long time, and they have there's a big manager and have a bunch of funds and have some other covered call funds. They just aren't flashy at all. I mean, if 8.67% helps you out, I mean, all right. So let's go ahead. We've looked at the stable dex. Let's look at the long-term max factor, and that's going to be fiat. All right. Or no, that's not. That's the short term. Long-term max factor is facts because it has a 12% yield. And long-term max factor, look at the 1-year total return. It has a really good 1-year total return. FEPI has a good 1-year total return too. And FEPI also has FEPI is third place on the long-term max factor. FTHI is second. And I don't have any problem with FTHI being ranked ahead of FEPI because if you look at it, FTHI's NAV is up this quarter. FEPI's NAV is down this quarter. So in any event, long-term max factor, it's all about facts, FTHI, and FEPI. All right, but the short-term max factor is the official max factor, also known as the sustainability index, or it's the same thing. If we rank it, I always check to make sure, yeah, they're the same. All right. Number 1 is fiat. Okay, we have an editor's choice. Editor's overriding it. We don't want to encourage. If you need an inverse, fiat might work, or it has been working, and no indication it will work in the future. Has been working, at least compared to these other things that are in here. So for whatever that means, and but we're gonna overrule that, and we are gonna make FTHI the fund of the night. I didn't realize that FTHI, I mean, FTHI did you guys notice that FTHI can beat SPY and no one ever hears about it? I mean, what's the catch? I mean, FTHI, I mean, let me go back and see if, SPY is just kind of a gold standard. It's not like it's the be all and end all. And now SPY gets it. So it depends on what time frame you look at. In the shorter time frame, FTHI looked impressive. In this time frame, though, I mean, really, you're going to have to say, I mean, I'm saying that difference probably isn't significant. SPY, yes, finished on top, but for good parts of the race, FTHI was on top. So I'd call that pretty much a tie. But if your dividends reinvested, you do have to. The thing about SPY is they pay a bigger dividend. So especially when you reinvest dividends, and you look at SPY's NAV. SPY's NAV was NAV positive. They went from 46 to 52. FTHI was also NAV positive, went from 20 to 23, which is the same thing on a proportionate basis, right? Just about pretty close. But anyway, yeah, I think I'm impressed with the old FTHI. I mean, it's only 8.67%. But if it can help you out. So, but let's just look at it. Let's look at both of them over the past year, just for fun. So let's go. January 25 to January 26. Yeah, there we have it. Okay, so SPY wins in that time frame too. But didn't you guys earlier? There was a time frame where FTHI was dominating. But in any event, this doesn't surprise me. SPY does a great job. And this is kind of a double my bad for FTHI, at least in this time frame, which is the 1-year time frame. And the double my bad is when a fund beats you in yield, you ought to beat them in NAV if you have the same underlying. FTHI is based on the S&P 500. So, and other things being equal, I mean, FTHI pays 8%, and well, to take that back though, let's see, FTHI pays 8%, and who did win on? I guess the NAV is actually close. SPY's NAV was up $1.20. FTHI's NAV was up 20 cents. Actually, SPY's NAV did better. That's the thing. It's a double my bad. Spy High had better NAV and better yield. And that's why everyone loves Spy High. So anyway, that doesn't change my mind. Out of the dogs we looked at tonight, FTHI and FEPI. I like FEPI too. We'll give FEPI honorable mention. How does that sound? All right. So what are you up to, old Z Bikerman? What do you learned? ICAP recently, large cap dividends, covered call fund. You're like old PFFA from some InfraCap. Well, let's look at PFFA. Virtus InfraCap U.S. preferred stock ETF. Wow. Bankers. Looks like bankers and hedge funds. I mean, Kohlberg, Kravitz, Roberts. That's like a, private equity. It's the biggest private equity probably, or that's old money. Kohlberg, Kravitz, Roberts. I mean, that's as blue-blooded private equity as it gets. That's like the Carlyle Group. Anyway, Bank of California, then Apollo. That's Leon Black's firm. He was on the list you aren't supposed to be on, the list you don't want to be on. I don't know if that has anything to do with Apollo's recent pullback in price, but probably not. They probably have crypto exposure. Or maybe so. Maybe it didn't help. But anyway, Energy Transfer, man, this thing's on fire. This ET stock. Telephone and TDS, Global Net Leasing, RLJ, Flagstar. Anyway, interesting company, interesting strategy. So it's preferred. It's an ETF full of some stocks, but they probably also have some preferreds in there. Anyway, yeah, that looks good. That looks good. Stable and growing dividend. Heck yeah. So what do you say about ICAP? You were saying, yeah, I learned about ICAP too and then forgot about it, but thank you for reminding me about it. So it's this infrastructure, people. Okay. So that's their thing, is infrastructure. Okay. So that's their theme. Global Net Leasing, Freeport McMoran, Citizens Bank, McDonald's, Amazon. Yeah. Marvell, Apollo. I don't know what Apollo has to do with infrastructure. Kohlberg, Kravitz, Roberts, NextEra Energy. Well, okay. Yeah, that's interesting there. I swear I learned more from you guys, way more from you guys, 100 times more from you guys than, of course, there's more of you guys also. So it's not a fair race, but I learned so much from you guys. Yeah. InfraCap. What the heck is this? So they have ICAP, SCAP, bonds, capital bond, PFFA, PFFR, the REIT preferred, and they have an MLP. Well, and of course they do. So this ICAP's been out since 2021, has about 90 million under management. Well, this is cool. Hey, thank you so much for telling me about that. Yeah, thank you so much. I really appreciate that. All right, guys, I'm getting tired. What else do you guys want to talk about? We can talk about whatever. I mean, there was stuff I didn't cover today on the afternoon show that I wanted to talk about as far as option stuff, but I should have done it this afternoon. I don't want to talk about it now. I'm making a video on ISSB, their earnings and their positions. So I don't want to, but anyway, I'm working on that, but yeah, I forget what I was even going to show. I had something I wanted to show. Oh yeah, I think I had a cool trade programmed in here I wanted to show you guys. It wasn't that one. Oh, well. Yeah, this is it. This is it. This is a do-it-yourself caller. And I just think it's interesting how these work. With 3 options, you don't even have to have any stock. Oh, no, actually, you do have stock in this one. This is if you have 100 shares of SPY, right? You have 100 shares, and you go out and buy 100 shares of SPY at 691. You go out a year from now and you write the 770 call. You get nearly 18 bucks for it. Then you go buy an at the money put. Well, darn it, that costs 40 bucks. So now you're negative. Then you go out as far as you need to get to offset the money, the 18 bucks, and it comes to about 10% in this case. And you've got a no cost, a free caller, and you can hold this for a year, and you don't lose until the market's down 10%. So if we go for a year and the market drops 20% at the end of the year, and you put this strategy, you on top of your SPY shares, these three options on top of your SPY shares, instead of being down, remember, SPY 100 shares of SPY cost $63,000. So instead of being down $6,300 because the market's down, or no, you should be down $12,000 if the market's down 20%, which is a lot of money on 63,000 to be down 12,000, but you're only down 6,000 because you got the head start from the put spread. But I really like that strategy. We're just paper trading it, just looking at it. It's right on the edge of being profitable. Hey, Andre. Yes, they did. They did declare that. Yes, thank you very much. Yeah, they absolutely did. They absolutely did. And these guys have on a these guys really have on kind of an exotic, but it's uncapped upside. These guys don't even have any stock, but this is their Bitcoin position. This is their Bitcoin long. They have three options, different amounts. They bought one, they sold two of them, all different amounts of units. But in the grand scheme of things, forget about what they bought, what they sold. They're net pretty long. You could see because the profit and loss graph looks pretty dang similar to stock. If IBIT goes down, they're going to suffer some kind of loss. IBIT goes up, they'll suffer some kind of gain. Now they manage these all the time, but remember that's basically what these stacked funds are. They aren't trying to have protection. They're just trying to get full exposure to the upside of the market. So this is basically a great big synthetic on IBIT that gives them one-to-one exposure to IBIT. But because of the sold options that are mixed in with the others, the theta off the sold options is what they plan on paying the premium with. So okay, and yes, speaking of the premium, the dividend, it was a 9-cent dividend. So what is 9 cents times 52 weeks? It's $4.68, I believe, something like that, or 470. No, 468 or 478, something like that. Anyway, this initially cost $25. These cost $25 to buy. Both funds paid, I think both funds paid 9 cents. Cost $25 to buy. So, so that comes to about 18%. So, I was trying to find I have the announcement in here somewhere. It's not there. I had the announcement somewhere. Anyway, but yeah, that's the strategy for Bitcoin. So what they do is they pair that with this. Well, not that. Forget about that. I have both trades. I have the ISSB trade in, or no, I just have the ISSB trade in. The ISSB has two legs. It has a Bitcoin leg, which is three options, one bought and two sold. And then it has a SPY leg or an SPX leg, which is three options, one option bought and then two sold options. And between so the SPY leg looks more like this, but it does have uncapped upside to the market. It doesn't have as much They're long for what is that? They're long 40 units. So they have 40 longs. They're essentially long 40 unit. So 4,000 shares of SPY, essentially from 670 through this call. But they sold a call and a put, but they didn't sell 40 of them. They sold 33 of them. So they have 700 shares unencumbered. So anyway, they're more long in this one. They're more long. They're like kind of leaning more long in IBIT than they are in SPY, but they adjust these all the time. And I just put in the most recent trade and the most recent closing prices. And what these guys are doing is probably they adjusted multiple times a day, and they're always adjusting their shorts and rebalancing and stuff. So it's probably going to kind of be hard to follow for me to follow here. But I just kind of wanted to show you they're using a three leg option strategy, but one long. This is basically stock, and this is a straddle. It's a covered straddle. You know, it's the old strategy where you own stock and then you sell a call and a put. But you own stock at the same time. It's that strategy. So anyway, intrigued by the concept of ISBG and ISSB, but I don't like Bitcoin. Yes, let's stay the heck away from these. But yeah, the concept is cool. But they can, if this strategy works, they can do it on anything. Wonder if they did. I'd be interested in maybe an Apple and Microsoft product, or maybe one that's where it's competitors, where when one does good, something else does. I mean, you know, Apple and Android. I don't know. I'm just trying to think of something. I mean, you know, two different ecosystems. I mean, Apple and Microsoft's always the one that I come back to. But I know they're still in the same business, but they can make funds that they can. The sky's the limit with interesting ideas once you can do fully leveraged on both sides. And like I say, I really think that, or what I'm always hitting on, is that they would do non-correlated assets. Bitcoin and gold may be a little non-correlated. I don't know, but stocks and gold, I guess, yes, it's non-correlated. Stocks and gold are. I think Bitcoin and gold, especially lately, have been running together, but I'm just nervous. I mean, you know, we saw today what happens when you have Bitcoin and gold and you have them both together at 100%. You suffer. I mean, those funds got killed. I mean, not that there's anything wrong with them. They did what they're supposed to do. ISSB. I mean, it got butchered, taken out to the woodshed. No, it was just down 0.5%. But that's the one that didn't have gold. The one that had gold, I mean, it was just absolutely brutal. Well, I don't have the settings right on here. Got started. I don't know what I did. Anyway, you guys get the picture. It was a. What did ISBG lose today? ISBG. They're down 11%. As you know, and that's, you know, and gold was what, down 10, right? And what was the other one down? Probably 1.93 or something. Gold's down 10.2. This is down 11.9. So was the other one down 1.7? Probably. That's probably about exactly what it was down. Nope. But IBIT was down. Anyway, whatever. The market was down 1.7, right? Or the market that in that range. No, the market actually, I forgot the market bounced into the close. Thank goodness. The market was down 1.5 at the lows. Yeah. All right. Well, all right. What are you saying there, Andre? You said won't these. So let's see what you're continuing on. Same only. I want ISSG stock gold. Yes. Stock gold. And that way you have, yes, stock gold. And that way you have some non-correlation. Stock and gold do run the same direction occasionally, but they are less correlated, I think, than some of these other ones they have. Stocks and bonds. And I know bonds aren't exciting, but I mean, it just, and they have a stocks and bonds one. I think they have a bonds and gold one. And then I think they have a Bitcoin and gold one. I mean, Bitcoin and stocks is interesting, but they're super correlated, in my opinion. I mean, stocks and gold, yeah, be more interesting. I just got starter positions, but I'll probably trade it in for the stocks and gold when that comes out. Hey, Bond, thanks for being here, man. Appreciate you for being here. All right, what else you guys want to talk about? I'm getting tired. I mean, and I really haven't done anything. I mean, I haven't made any new content. All I've been doing is these stupid live streams. I like doing the live streams, but but I'm not doing. My station's not progressing. My station's back in the dumps. You'd be more interested in international stocks and gold, yeah. Did you see? I was talking about it the other day. It's a quantitative fund that's a momentum, international momentum, and it's called IMOM. Have you heard about this one? And I was saying there needs to come out with iMommy, IMMY, and because obviously they're doing something right. I mean, it's up 52% since 2025. So, something that's just on a massive. I mean, but anyway, it's international stocks though. It doesn't say it in the name though. It says quantitative momentum, but I think the quants are on internationals or whatever. I looked it up earlier. You have to take my word for it. Too much. Yeah, exactly. No, it's just nice to have choices. One reason I thought of it's because I saw it today and it said the word international in it. I hear you though. I hear you. I just like the idea of momentum and trends and taking your judgment out of it. And so the idea of feed and 5e, I mean, I bought the sales pitch. I get that these guys are trying to sell stuff and I bought the sales pitch and stuff, but feed and 5e, I was picturing something to work out that would actually catch the feed and 5e have not caught any trends. Like I say, it hasn't even been trending as much as ULTY. And ULTY, to be honest, hasn't been the greatest fun lately, especially. So it's not even doing as well as that. Hey, Chad, how you doing there, bud? So anyway, these are my favorite international funds. EFIS, BOAT, NIHI, LBHI, UIVM, VXUS, little Vanguard, the whole world except us is VXUS, and VYMI. Those are some good ones, Andre. What are you up to tonight, Chad? I'm surprised you aren't out at the club. It's Friday night. Come on. What are you doing? You're wasting your youth. 10 o'clock on a Friday night. What are you doing? Come on. I'm too old to go out. Plus, I'm too cold. I'd be too cold if I went out. Hanging out, maxing and relaxing. Absolutely. Absolutely. Well, all right, guys. I'm going to do the same thing. I will talk to you tomorrow, though, and I have more content planned. Be looking out for the Top 20 show. Maybe I'll even do it live. I mean, since I've been so lazy lately, I probably won't even want to record it. I'll probably just do a live stream tomorrow night, and we'll do the Top 20. I like doing the Daily Factor, and I really like the Top 20 show because we can drill down on the very best funds that week. But I also think it's fun to do the random like letters so we see stuff that we haven't seen. Like FTHI, I wouldn't have thought to look at that. I mean, that thing's not the best thing in the world or whatever, but it's something that we never talk about that's pretty dang good. You're almost 40, I hear you. I hear you, man. All right, guys. Hey, well, thank you so much for being here as always. Appreciate your time and everything. Don't forget, you can always like and subscribe, and I appreciate that. I'm being so bad at this. You can support the channel at paypal.me/MaximumXD. But seriously, don't forget, this is not financial advice. Consult a professional advisor for all your financial planning needs who can give you legal, safe, good advice. I can't give you legal advice. All right, guys. Thank you so much. I appreciate you all being here. And I will talk to you. Oh, yeah. Like the video. Share it with somebody. I don't know. Subscribe if you don't. I'm trying to get back over 5,000. I've had 35 cancellations in the last 2 weeks, and I don't know what I'm doing wrong. I'm trying to do a good job. All right, guys. Thanks so much. Have a good one.